This meeting is being recorded.
Good evening, good afternoon, good morning, whenever you are. This is another part of Become cTrader Master webinar, and today we are going to talk about the pivot points, and I will show you how to apply the pivot points to the chart. What is the pivot point, how to use it in your strategy, how to use it to analyze the markets, and what do they tell you, how they improve your trading from the technical point of view. As you can see, I'm using the web version of the cTrader platform. This is, of course, one of the markets. Let's say we are going to switch to the, let's say, euro dollar 1 hour time frame chart. Not a big deal. So what we are going to do now is to start a little bit about the definition. So what is actually a pivot point? Well, it's a kind of like a technical analysis indicator, or like a kind of a calculation, which is basically a line on your chart, which is used to determine the overall trend of the market over different time frames. The pivot points itself is simply the average of the intraday high and low and the closing price from the previous trading day. On the subsequent day, trading above the pivot point is thought to indicate ongoing bullish sentiment, while trading below the pivot point indicates bearish sentiment. The pivot point is the basis for the indicator, but also includes all the support and resistance levels that are projected based on the pivot points calculation. All these levels help traders see where the price could experience some sort of the support or resistance. Similarly, if the price moves through these levels, it lets the trader know the price is trending in that direction. So pivot point is an intraday indicator. So if it is an indicator, you can apply it by clicking on the indicator button, you go to the other, and then you click on pivot points. It's used to identify trends, reversals, mainly on equities, commodities, and forex markets. Those levels, as you can see here, are determined, calculated to determine the levels in which sentiment of the market could change from bullish to bearish and vice versa. So the day traders calculate pivot points to determine levels of entry, stop, and of course profit taking, for example. But let me just switch to our indicator. So we got the pivot points indicator applied to the daily time frame chart. So that would be daily pivot. There is no shift apparently here in this pivot point. You can of course set your shift to some sort of the 8 hours or maybe 1 or maybe 2 hours from your current location, but most likely you don't have to bother about it at all. The pivot central line is white, the resistance is red. Sorry, the resistance is green and the support is red. So you press OK, and now you have the pivot lines on your chart. As you can see, daily pivot, which is of course this is the pivot main level, which sets the mood for the whole session. So as you can see, level of 1 point, let's say 0899 is the pivot point, and the market has been oscillating up and down from this level. So if we go lower, for example, towards the S1 support level number 1 at 1.0839, then of course the sentiment is bearish, is being considered bearish. So if we go to the north towards the R1 level, resistance level 1, it is at 1.0953. The sentiment is being much more positive, much more bullish in that situation. As you can see on the euro dollar hourly time frame chart, right now the sentiment is like varying from slightly negative to slightly positive, but nothing really interesting is going on right now on the market. Please notice that this is a daily pivot, which means the calculations for this pivot are being made by the price high and price low from the previous day, and you need to apply your pivot to the lower time frame than it is calculated. For example, this is the daily pivot, so it's being you can apply this daily pivot to any time frame which is below the daily. For example, you can apply it to, let's say, 4-hour time frame, not a problem, it will appear here as well. Oh, of course the number of the levels is still the same, but the overall number of the levels is way bigger. So now this let's say a chart looks very cluttered. Yeah, there's plenty of levels, plenty of the information on this chart, not really good for trading. If someone wants more clarity, you basically can switch to lower time frames. I will use 30 minutes time frame right now. As you can see, the length of this, the level is still the same, 1.0899, but the length of this pivot is now longer because every candle is 30 minutes. So that means this is the beginning of the pivot and the beginning of the new day. This is the end of the new day, right? So after the certain hour is gone. So right now this is of course the almost this is almost midnight. Then new pivot will be printed on the chart. So this is how you basically apply the pivot points on the chart of the cTrader, and a little bit more about how they are being calculated and how to use them in your analysis. So generally, you can find over the internet the formulas to calculate the pivot points. For example, this pivot, the main pivot, right, the white line here, is being calculated when you take the because this is a daily pivot, so you need to take the daily high, yesterday's high, yesterday's low, yesterday's close, and divide it on 3, and then you got this level. So this is actually nothing but mathematics, okay? And this is how the pivots is being calculated. The resistance level 1, resistance level 2, resistance level 3 are calculated exactly the same. Only the numbers matter. So you can find it on the internet. That the situation here is that it doesn't matter what market you trade, the pivot points are being calculated every time the same way. They take high, they take close, they high, low, and close, and then they calculate it for the possible resistance or possible support in the future on a certain market. In our situation, this is the euro dollar. Because this indicator is automated, so don't bother calculating the pivots manually. Okay, this is why I don't want you to be bothered with this situation here. Of course, there is a special formula, there's mathematics, you can calculate it, but if you have the indicator and the levels are being automatically shown, don't bother about calculating it. What much more important question is, what do pivot points tell you? What are they? So basically, let me clarify this very fast. The pivot points are, like you see intraday indicator. For example, the intraday indicator, if you trade futures, if you trade commodities, if you trade stocks, okay? Unlike moving averages or like oscillators, they are static and they remain the same. They remain on the same levels throughout the day. This means traders can use the levels to help plan out their trading in advance, right? I will give you a little bit example. Traders know that if the price falls below the pivot point, that central pivot point, for example, the traders will be likely shorting early in the session, right? So conversely, if the price is above the pivot point, the traders will be buying, right? So this is like a neutral level, and the price oscillates above and below this level. The S1 or R1 or L2 or S2 levels can be used as target prices, target levels for this kind of trades, or they can be used as a stop loss levels. So they can be basically either take profit or stop loss levels as well. One of you might ask, so how to combine the pivot points? Can we combine the pivot point with something else, or can we just use the pivot points and just trade using the pivot points and nothing else, just like it is right now on the chart? The very fast and clear answer for that question is that you can use on the pivot points for your trading. There is no problem. You will be using price action and the pivot points, but combining pivot points with other trend indicators is very common practice among the traders. A pivot point that also overlaps, for example, or converges with, like, I don't know, 50 period moving average or 200 period moving average or Fibonacci extension level, uh, Fibonacci projection level, becomes like a stronger support and resistance levels, because we talk already about the Fibonacci. So let's now let's do the comparison between the pivot points and the Fibonacci retracements. Okay, because that's kind of a interesting for many of the traders, because I know you guys are using the Fibonacci retracement. So the pivot points and Fibonacci retracements or extensions, both, they draw horizontal lines to mark potential support and resistance areas. Let me just show you, for example, the Fibonacci retracement from let's say from this high to this low. Okay, so we want to make the retracement here, and we want to see this high and this low. So right now the market retraced more than 30%. You can see how it has been consolidating around this 38% retracement level of the previous swing down. So this is around the level of 1.0997. Okay, then of course there was a breakout towards 50% of the Fibonacci retracement. The situation here is that the Fibonacci indicator is useful because it can be drawn between any two significant highs and lows, or swings, okay, price points, whatever you want to call it, and it will then of course create this levels that might correspond with the pivot points. And sometimes, for example, like that situation of 61% Fibonacci retracement and the R1 level, this little bit zone here might be very interesting from the trading and analysis point of view. So Fibonacci retracement and extension levels can be created by connecting any price points on the chart. Once the levels are chosen, lines are drawn. As you can see, percentage levels are being placed on the charts, and that's it. Now, but pivot points, in contrast, do not use percentages, and the pivot points are based on the set fixed numbers, the high, the low, and the close on the prior day. Then it's being divided by 3, or then multiplied by 2, or something like this, to get the projection for the prices. So that's the similarities and differences between the pivot points and the Fibonacci retracement levels. Let's now just talk a little bit about limitations of the pivot points, okay? Because this is not like a golden, the holy grail of the indicators. No. This is just a principle mathematics. This is just a mathematical calculations based on the actual market behavior on the prior day. So this is why they work for some traders, and the other traders might not find them useful at all, right? There is no assurance that the price will stop or reverse at any of the R1, R2, or R3 levels created on the chart. There is no guarantee. There is no assurance. We need to be very, very certain of that situation. And other times the price will move back and forth through our level, just like we have here. We are oscillating around the level of the central pivot. As with all indicators, it should only be used as a part of the complete trading plan. The pivot points are much more useful, much more, let's say, much more they provide more insight, more analysis to the chart, and if they are being used with the other, let's say, the other moving averages, Fibonacci's, candlestick patterns, oscillators, and the other let's say indicators from the technical analysis. Okay, so please remember about this. One more very, very interesting thing about the pivot points. Unlike most technical indicators, pivot points are intended to predict or market turning points, and they are calculated using simple math. Okay, previous day high, low, and close. However, in the Forex market, of course, pivot points are calculated using the entire 24-hour trading period, with the price at the end of the US session deemed the closing price. Okay, so please remember this. The classic pivot point calculations produce the pivot point itself, the strongest of the indicators, okay, as well as 3 levels of support and 3 levels of resistance. The location of a price relative to the main pivot point is used to judge whether a given session has generally been bullish or bearish. So the pivot points can have a plenty of the let's say usefulness when you're creating your strategy, because it's mathematics, as I said again. And this is why it's not being subjective, it's not being very susceptible to, let's say, interpretations and subjectivity of the traders. This is just mathematics, and every trader will have the same pivot points on the same very chart, which is why the pivot point might be a very nice foundation of your trading system. So let's just find out the other pivot points or any other markets. For example, let's remove this pivot point. So you go to the object managers and you click remove all indicators, and then the pivot points is gone. Let me go to, let's say, okay, let's switch to the Bitcoin. This is again 30 minutes time frame chart. So let's apply the pivot points on the Bitcoin. So we go to indicators, other, and the pivot points. And as you can see, we don't use any shift of the hours to calculate the pivot points. We just click OK, and right now you can see many times the price was rejected from the central pivot, and now it's being under this pivot, and it's trading below it. So S1 was hit as well, and at some point of the day that the bears tried to reach even the level of the S2. As you can see, we got the S3 level here on the chart. So let's just try to apply Fibonacci extension to see that maybe there is some convergence in levels between the pivot points and the Fibonacci extension. So let's say we want to measure Fibonacci's from this high to this low, okay, and then of course we want to where are my levels? Okay, it's here. One more second. Fibonacci's. There you go. Fibonacci retracement, Fibonacci fund, Fibonacci expansion. Okay, so this is our first level. We now go here, and now we're supposed to go a little bit higher to calculate our third level, but it's not here. Let me just take a look. 61%, 100%, okay, 123, 123, 150. We can just get rid of this display prices. Okay, 261 is not that big. This is not very often used. This is the most important one, and this is one of the most important as well. So maybe something like this will be much more helpful in that situation. Let me just take a look. Okay, there you go. So as you can see, we are trying to see whether the Fibonacci levels are somewhere in line with this. Whether projections are somewhere in line with this pivot points. So far, they don't actually look like they're converging. So maybe we should use something else. Maybe sometimes it's good to use, for example, the moving average. So what you do, you go to the trend, and let's say you will say, okay, it's just a simple moving average would be good. 14 periods for the intraday trading is fine. You can always change it to more periods. For example, I like to use 100 periods here, and then you can see whether this 100 period moving average is being let's say in line with one of these levels. So 100 periods doesn't actually show us anything special here. So as you can see, market is not really very you know in line with the moving averages. We got the technical support 29,974. So let me just zoom out to see whether some kind of older important technical support might be in line with the pivot points. I think that one of this is here, which is in line with S2. So again, the S2 and this technical support might be very good, but the main one, which is apparently here, this is the technical support. I'm not talking about the pivot points, is not in line with anything, because this is our S2, this is our S3, and this level is not in line. It's in the middle. It's in the middle. I wish it was yesterday. Then it was perfect kind of technical support and Fibonacci support level 3 convergence, almost the same level. Nevertheless, today is today. S3 is way below the technical support. So for all of the for example bears, for all traders who are in a negative sentiment towards the Bitcoin, this level here might be used as a, let's say, target for shorts when this technical support is violated. Yeah, because that's the next S3 is the next level of the potential support based on the pivot points calculations. So this is how it how it works with the pivot points, and the history of the pivots can show you the situation, can give you more insight about the situation on the market as well. You can see, for example, let me just move this graph a little bit to the right. You can see the sequence of pivot points, daily pivot points, right? This is the main pivot points. Price hit this pivot point and went higher. Central pivot being way above the previous one, central pivot being way above the previous one, and then central pivot being way above the previous one. So it means that, of course, we might have some sort of the uptrend on this market. Then another pivot, central pivot line is above the previous one, and then yesterday comes when the pivot, central pivot, is being located below yesterday's central pivot, and today's that almost in line. So as you can see, this movement to the upside flattened, and if the next pivot is lower than today's pivot, yeah, in the next pivot, which means then the next day pivot is lower than today's, there is a valued information telling us that the sentiment is shifting from positive to more negative. So the correction, or maybe some kind of a distribution, if you know the stems, might take a little bit longer in order to give the chance for the bears to push the prices lower. All right, so that's why you should basically watch the pivot points every day, and the history of the pivot points, which is not a problem to do on the cTrader platform. There's plenty of these pivots right in front of your eyes, and the screen is not being really cluttered by these pivot points. Even if we remove the moving averages, you can see clearly that the situation is very in favor of the analysis and trader. What else we can do with that pivot points? We can switch the color theme. If you don't like black, you can stay in white background, and now this this pivot points is now, that center pivot is now gray. The resistance pivots are still green, and the support pivots are still red. So nothing changes really except the background. Maybe that's better for your strategy. Maybe that's better for you to analyze the markets using this kind of settings. That's everything from me for today, with the brief explanation of pivot points, or how to calculate it, how can you identify them on the chart, why they are here, what you can do with them, and how can you mix them with the other technical analysis indicators. Hope you guys like it, and I would like to take this opportunity to encourage you to register on another webinar, and we will be talking about another useful indicators for traders just next week, same time, this very same room here on the webinar. Thank you very much, guys, for your time. I wish you all the best, and see you next time. Bye bye.